FY26 earnings conference call hosted by Haim Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Astha Jain from Haim Securities. Thank you, and over to you, ma'am.
Darwin. Very good evening, ladies and gentlemen. Thank you for joining the Agarwal Industrial Corporation Limited Q1 and FY26 earnings call. Joining us on the call today from the management team is Mr. Vipin Agarwal, Chief Financial Officer. We will commence the call with the opening thoughts from the management, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. Before we go on to the main call, I would like to read the standard disclaimer. There may be forward-looking statements about the company and the subsidiaries, which are based on the belief, opinion, and expectation of the company's management as on the date of this call. The company do not assume any obligation to update their forward-looking statement if those beliefs, opinion, expectation, or other circumstances should change. These statements are not guarantee of future performance and involve risk and uncertainties that are difficult to predict. Consequently, listeners should not place any undue reliance on such forward-looking statements. With this, I will hand over the call to Mr. Vipin Agarwal, Chief Financial Officer, to take it forward. Over to you, Vipin, sir.
Thank you, Asana. Good afternoon, everyone. Thank you for joining the Agarwal Industrial Corporation Limited earnings conference call for the first quarter ended 30th June 2025. The earnings presentation has been uploaded to the stock exchanges and is also available on the company's website. We trust you have reviewed the information provided. The company's performance during Q1FY26 was impacted by a combination of external challenges. Revenue and operations was 594 crores, reflecting a decrease of 16.1% year-on-year. EBITDA was 38 crores, resulting in an EBITDA margin of 6.4%. Net profit for the quarter was 13 crores. While the performance was impacted by certain external factors, we continue to focus on driving long-term growth and strengthening our market position. During the quarter, bitumen volumes were at 124,600 metric tons, which were lower than anticipated volumes due to certain external factors. Despite these challenges, the bitumen segment remained the largest contributor, generating 496 crores in revenue. The shipping segment also played a key role, contributing 72 crores or 12.1% of the total revenue. These results underscore the strength of our integrated model, which combines import, sourcing, manufacturing, and logistics, ensuring consistent operations even in a challenging environment. The quarter was significantly impacted by a combination of geopolitical disruptions and the early onset of the monsoon season. Geopolitical tensions, particularly between India and Pakistan, led to disruption in trade flows and shipping schedules, resulting in an estimated loss of 15 days. Additionally, highlighting the geopolitical tensions across USA, Iran, the Middle East, and Israel disrupted regional trade, particularly affecting the UAE and the wider Middle East, causing nearly 1 month of impact on shipping movements. The early onset of the monsoon season in India further slowed construction activity, leading to softer demand for bitumen. These external factors, combined with seasonal moderation, directly impacted bitumen volumes and effective overall performance during the quarter. Despite these external challenges, India's road infrastructure sector remains a strong growth driver. The government has set ambitious targets, with projects award expected to reach 7 lakh crores by FY26 and scaling up to 10 lakhs annually thereafter. Key programs such as Bharatmala and PM Gati Shakti are expected to drive this growth. With the growth of constructing more than 100 kilometers of road per year, underscoring the scale and urgency of infrastructure development. These government initiatives offer strong visibility and sustainability demand for bitumen, positioning it as a crucial raw material for the country's road construction projects. Building on these developments, post Q1 FY26, the company announced the acquisition of 100% equity shares of Konkan Storage Systems Private Limited, a company engaged in port-based industrial and infrastructure activities. This acquisition will further strengthen our logistics and infrastructure capabilities, enabling AICL to capitalize on the growing demand driven by these government initiatives. Subject to regulatory approvals and execution of the share purchase agreement, Concurrent Storage System will become a wholly owned subsidiary of AICL. This acquisition aligns with AICL's integrated platform, which spans importing, sourcing, port-based storage, manufacturing, and last-mile delivery, and remain a key differentiator in the market. With a private sector bitumen market share of nearly 20%, AICL is strategically positioned to capture the opportunities arising from India's growing infrastructure demand. The company remains focused on expanding its capacity and strengthening its market position as infrastructure development accelerates. Looking ahead, Q1FY26 demonstrates our commitment to operational discipline and resilience despite external challenges. With the continued enhancement of our infrastructure and logistics capabilities, AICL is well positioned to capitalize on the long-term growth opportunities within India's infrastructure sector. We remain focused on scaling our operations, driving efficiencies, and delivering sustained value as the infrastructure landscape evolves. Thank you all for attending today's call. The floor is now open for the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the queue, you may press star and two. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question is from the line of Kaustubh Shah from Wolfert PMS. Please go ahead.
Yeah. Hi. Thanks for the opportunity, sir. So I had a couple of questions. Firstly, sir, on the volume. So obviously, in the first quarter, we have just clocked 125,000 tons, and second quarter is usually a dull quarter. So last year we had guided 650,000 tons of volume for FY26. So what, according to you, should we look at in terms of the full year guidance for the volumes?
As explained in my last con call also, though we have a shortfall of 50,000 metric tons in the first quarter, we assume that by the end of this year, we should be able to achieve the growth as predicted in the earlier con call. So we should be able to do around 6 lakh tons.
Around 6 lakh tons?
Yeah, the guidance still remains around 10% of the volume that we did last year.
Okay. And other thing was that on our vessel charting, if I look at the segmental split, so over there the EBIT has come down from an average 28% to 11.3% in the quarter. So any specific reasons for the same?
Yeah, as explained in my opening remarks, there has been due to the geopolitical situation, the vessels were not optimally utilized. So the vessels were underutilized in this quarter.
Okay.
Hence, it affected the EBITDA margins.
Okay, sir. And now almost 2 months have passed in this quarter. So any improvement that we should assume from the previous quarter?
Yeah, there are improvements in this quarter because, as explained, these geopolitical situations no one can predict, and no one will even assume that there can be an India-Pak war, which lasted maybe for a short period, but it does impact business.
Okay, so we should, okay, fair enough. And lastly, I'll again join with the last question was that how much bitumen volume was handled through our own vessels out of the 125,000?
It's almost 60%, 63%.
63%. Okay, I'll join back the queue for further questions. Thank you, sir.
Thank you. The next question is from the line of Yash Verma from Abnay Wealthwise. Please go ahead.
Hi, sir. Am I audible?
Sir, you are audible. You may proceed.
So, sir, in FY25, the company missed its 20% volume growth guidance due to the vessel maintenance and cyclone-related disruption. So now for FY26, the company again guided for 20% volume growth, with stronger quarter expected in quarter 1 and quarter 4. However, the quarter 1 has already seen a 26.9% year-on-year degrowth. So does the management is still confident in the achieving this guidance? And what specific actions are you going to take to mitigate such external risk and ensure the volume recovery in the remaining quarters?
We have done close to 535,000 in FY25, and we assume that we would be growing at around 10%, nearly 10% of the given volume. So we should be, our guidance still remains at around 6%, all depending upon geopolitical. Again, this time I would like to add a disclaimer of geopolitical situations, because if there is any disturbance in geopolitical, maybe within any country, it may impact the flow of product. But these all factors are already passed now. Hence, for the balance 2 quarters, we will be able to give you a better guidance in the third quarter.
Okay, sir. And sir, if you could provide me with your EBITDA per ton guidance.
EBITDA per ton still remains around same level that we had given in the first quarter, around 4,300, more than 4,300 for the year.
Okay, thanks.
Thank you. Ladies and gentlemen, if you wish to ask questions, you may please press star and 1. The next question comes from the line of Tanvi from Hem Securities. Please go ahead.
Hello, sir. Again, I think it would be a bit of a repetition, but the question remains same regarding the guidance that, earlier we had guided for FY28 that you'll be doubling your volume from FY25. And now, given the disturbance that we have faced in FY25 due to dry docking and maintenance, and now in FY26 due to geopolitical situation, so are we also shifting our target of FY28 to any later years or something?
Thank you so much. If you have seen the track record of the company, in FY22-23, we clocked around 425,000 tons. In the next year, we clocked around 490,000 tons, which is almost a 10% growth. And in 24-25, we did around 536,000 tons, which is again 10% growth. I would like to recorrect. In FY23-24, we did around 16% growth from 424,000 to 490, and in 24-25 we did around 535,000 from 490,000, which is almost a 9.19% growth. Given these factors, the guidance for the FY28 still remains the same, because this last quarter was one of the quarters which is affected due to geopolitical situation, which may not arise every year. Hence, our guidance remains the same for FY28.
Okay. But given the fact that you've also lowered your EBITDA guidance from 4,500 to 4,300 levels.
I said more than 4,300, ma'am.
Okay, but still I think lower than 4,500, which you earlier guided, and there will be also higher depreciation due to the one more vessel you had acquired in last quarter. So how do you see your bottom line going forward?
Bottom line, I would like to give you in metric tons only. We had around 4,100 in FY24-25. The guidance earlier was given at 4,500. We still maintain. However, would be adding a disclaimer at minimum 4,300.
Okay. Perfect. That makes sense.
Okay. Thank you so much.
Thank you.
Thank you. We have our next question from the line of Suyash Bhave from Wealth Guardian. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes, you are audible, sir.
Sir, in Q1, as per official data, the total bitumen imports into India have risen by 3%, while we have lost volumes of 27%. So, what kind of market share loss have we experienced in Q1?
In the first quarter, our sales volume is down by almost 20% from the preceding last year's first quarter. We were at 170, and now this year we have done around 126.
Yes.
125.
Yes, I understand the volume drop. I'm asking about the market share drop, because the total bitumen Indian imports have risen by 3%, but we have actually lost volumes. So hence I was talking about the market share drop. What kind
the
of
increase that you are seeing is in terms of drums, not in bulk. and the bulk volume still was lower by almost 8 to 10% in the first quarter.
Okay, understood. And in this quarter, as in for the last couple of quarters, we are seeing higher tax provisioning. For example, in Q4, tax provisioning was 17%. In Q1, it is 22%. Has there been any change in tax laws in UAE?
No. The difference between Q1 and Q4 is basically due to the volumes. As we assume in Q4, when we see that the volumes are high, as does the taxation, we have to pay higher taxes as per the advanced tax norms by the income tax. Hence, you see the differences. But the tax slab remains the same.
All right. In the shipping vertical, we have seen a big margin drop as well as a revenue drop. What are the key costs in the shipping vertical?
Sorry, can you come back again, please?
Sir, in the shipping vertical, we have seen a margin drop from 32% to 11%, and we have also seen a revenue drop by almost 20 to 24 crores. There has been a drop in the revenues. What are the key costs in the shipping vertical? Why is there such a 20% margin drop?
See, your fixed cost remains the same in any business that you do. So even in the shipping side, your fixed cost of wages, crew, the shipping operation, everything remains same, irrespective whether the vessel is moving or not. As explained, due to the geopolitical situations, when the vessels were not moving, but your fixed cost remains the same, and you tend to lose on the revenues because the voyages are not complete due to the factors explained. That is the reason. The expenses side remains the same, whereas the revenues are on the lower side.
All right, sir. So I have one last question on the recent acquisition that we did. So even before that, we were already building up a 40,000 metric ton storage at Mangalore, and I'm assuming this recent acquisition was very nearby in Karwar. Is what I'm assuming because of the name of the company. So can you give more details about it, as in what is our cost for that, what kind of capacity does it hold, and what is the strategy for having another port nearby to one that we are already building?
We are already operating at both the places, even in Karwar and Mangalore. Both the places are giving almost 35 to 40% of the company's revenue every year. And at both the places, we are having tankages on lease. Hence, we have acquired existing company in Karwar and building our own storage in Mangalore. Thus, this will contribute in saving of our rental expenses that we are paying towards the operations in both the two locations, thereby adding to the bottom line in terms of saving any additional rentals by increasing throughputs.
Okay, all right. So can you give the cost and capacity for this new acquisition? The cost that
the new acquisition is having existing capacity of more than 24,000 tons, and the total capex will be more than 30 crores in this.
Okay, sir. Understood. Thank you, sir.
Thank you so much.
Thank you. Participants, to ask a question, you may press star and 1 on your touchtone telephones. Our next question comes from the line of Vishwanath A from Prosperity Wealth Management. Please go ahead.
Good evening, sir. Thanks for taking the question. So we have recently added capacity during the quarter of vessels. So I just wanted to understand what is the capex for it and how have we funded it?
Can you please repeat your question again, please?
Yeah. So regarding the vessel addition...
Vishwanath, sorry to interrupt. You're coming through a little muffled. So may we request you to please check on the mode that you're using for your handset?
Is it better now?
This is much better. Please go ahead.
Yeah. So regarding the vessel addition in Q1, I wanted to understand what was the capex and how have we funded it?
The vessel was acquired in the fourth quarter, which is operational in this quarter. We had already given the details of this vessel in the previous con call.
Okay. And my second question is, in our presentation, you mentioned that the bitumen demand growth is 4 to 6% CAGR, but we are targeting mid-teen growth for Agarwal. So what is the rationale behind that?
Every year, as we have explained in earlier con calls, this volumes that we are anticipated to bring into the Indian ports, it requires a lot of logistical challenges. Thus, we are focusing on the challenges to increase the volume and also get into the market share of existing importers.
Okay, sir. That answers my questions. Thank you.
Thank you.
Thank you. Our next question is from the line of Yash from Equity Capital. Please go ahead.
Yeah, thank you for the opportunity. So in the previous calls that you have mentioned that demand has never been the problem, but also you said recently that there has been drop by 10%. So bitumen consumption has dropped by 10% in this quarter. So sir, first is that. So how is demand looking as of now? And so second, you said on the logistics side that bringing the bitumen is a problem, but we have been sorting it by adding more vessels.
It's a challenge problem.
Correct, sir. So we have the capacity of around 113,000 and we can do around 8 to 9 round trips. So considering that we can do 9 to 10 lakh tons. So I want to understand on both the fronts, like how are we seeing it?
Can you break your questions for me to answer, please?
Correct, sir. So first is on the demand side and second is on the logistics side. So these are the two questions.
As I have explained, there is no problem in terms of demand for the product. But if you are seeing the weather conditions, which from the month of May, the monsoons have arrived earlier this year. Hence, there was a low demand of product because construction activities do not happen during monsoons. That is one of the factors which is lead to lower production of construction of the road, hence requirement of bitumen. I hope I have addressed your question.
Got it, sir. And sir, on the logistics front?
Can you repeat the question again, please?
Yes, sir. So as I said, with the vessel capacity of around 113,000 and also we can do around round trips of 8 to 9 times. So we can bring in around 9 to 10 lakh tons of bitumen, right?
Yes.
So
as I've explained earlier in my con calls, when we are going to the eastern coast of India, it takes around 40 to 45 days for us to complete the one cycle of bitumen supply towards east, and we are working only during 8 months in the year. 4 months of the monsoons, we are not bringing any product into India. Or you can say lower volumes are moved into India. So hence, for India, we are only doing 8 months of vessels turning around.
okay, got it. And so also. So can you hear me?
Yes, you are not audible at the moment.
Hello, can you hear me now?
Yes, we can hear you. Please go ahead.
Yes. So second question is, can you please help us understand about the shipping segment, like how is the revenue generated? What is the charter rate per day or per ton? And what is the fixed cost?
Commercials.
When does it break even?
Commercials, we usually do not disclose commercials, but other vessels are always moved on maybe a voyage charter or a time charter.
Okay. That's it from my side. Thank you, sir.
Thank you. The next question comes from Botla Lakshman Kumar from CRISIL. Please go ahead.
Yeah, am I audible?
You are audible, so you may proceed.
Yeah. Sir, thank you for the opportunity. Sir, I would like, as majorly on business side, many people has asked questions. So I would like to know better regarding the liquidity profile. So how is the liquidity currently regarding our company?
Absolutely no problem in terms of liquidity.
Okay. So in terms of any free cash or anything we can disclose?
That is one of the reasons we are putting Mangalore and Karwar projects, wherein as on date the company is funded all the cost of these two projects through their internal accruals.
Okay. Understood, sir. Thanks.
Thank you. participants, you may press star and one to ask a question. Our next question comes from the line of Keshav from Raksan Investors. Please go ahead.
Yeah, sir, you mentioned the Indian bitumen imports have dropped by 8% year on year, and our volumes have come down by 24%. So how significant is this underperformance? Are there quarters where these kinds of differences are expected, or are we seeing increased competition which might be straining our market share?
Thank you so much. I have explained earlier, the demand of the bitumen has gone down in the first quarter due to the early onset of monsoon, along with the factors, geopolitical issues in the Middle East and the Gulf region. That is one of the reasons which led to lower imports of bitumen. There is no problem in terms of requirement of bitumen into India. It is purely because of three reasons: the geopolitical situation between India, Pak, US, Israel, and the Middle East, and the monsoons. These three factors have resulted in lower imports of bitumen.
Okay, so there's no impact on our market share. That is basically what I was trying to understand.
If you see the entire year, I think you should be able to see better performance than we did into 24-25.
Okay, and sir, the chartering margins, should they also bounce back to earlier figures in the upcoming quarters?
Bounce back as and when we start increasing the volumes and the vessels are utilized 100%. All the numbers and EBITDA that we used to see in the earlier quarters, you'll be able to see in the next 3 quarters. Usually even quarter 2 is a slow quarter for us if you see year on year, but Q3, Q4 should be a good quarter this year.
Okay, and sir, lastly, with the opening up of NHAI tenders worth 3.4 lakh crores this year, so do you think we could see a higher volume growth than 10% what we are guiding now, or could there be a much better growth in the following year?
I assume we should be able to grow better than the forecast guidance that we are giving. As you mentioned, there are a lot of tenders being awarded which are scheduled to be executed in this next 2-3 quarters.
Okay. Thank you, sir. That's all from my side.
Thank you. Our next question comes from the line of Kaustubh Saha from Wolford PMS. Please go ahead. Kaustubh, your line has been unmuted. You may proceed with your question.
Hello. Yeah, thanks for the opportunity again, sir. I had 2 questions. One was, some participant asked about the maximum volume that we can do, and you gave a very detailed answer. But in terms of tonnages, if you can just know, can you give a number that on 1,25,000 capacity of vessels, what is it that peak capacity that we can handle for 8 months or for 9 months, whatever business we can do, if at all at full capacity we operate?
We can easily do 5 to 6 lakh tons.
Achha, only that much. So for any, so now we'll be hitting 6 lakh tons this year. So
there
have to do. Sorry, go ahead, sir.
There are turnarounds. See, all the vessels, when they are going to a particular port, there is a time-consuming. There are days, late days which they take from one port to the another, and during that time we require additional products. Hence, we are always taking vessels from outside, even on date. So the total capacity that you will be having, it is not necessary that you can use it 100% all the time, because some vessels may be at the load port for loading and some vessels will be at the discharge port for discharging. Makes sense?
Understood.
And continuous movement of vessels when we try to optimize the maximum utilization of the vessels for the particular period.
Okay, sir. Okay. So which means that our capex will continue. Whenever we get a good opportunity, we may still keep on buying the vessels, correct?
Yes, as explained in all my earlier con calls, as and when we get any good opportunity for acquiring any new vessels, the company will definitely go for it, because we still require vessels as we are taking from third parties.
Understood, sir. Thank you. That was on this. And secondly, on the Konkan storage acquisition, I had 1 or 2 questions on that. So what is the capacity which the storage facility will be able to handle?
It is already having a capacity of more than 24,000 metric tons KL.
24,000 metric tons. Okay. And over here, you had mentioned in the press release also that all solid, liquid, gaseous, all three kind of forms of material can be handled through this facility. Is that right?
Yes.
Okay. And in which part of the country is this facility available?
It's in Agarwal, Karnataka.
It's in Agarwal. And one last question on this side. So we paid some 22 crores of compensation for this acquisition, whereas the FY24 turnover was just about 3.5 crores. So do you feel that the acquisition was a bit too pricey at 6.5 price to sales?
No. See, these are terminals wherein you always have to see the replacement cost of any terminal, or if you have to set up a terminal, what will take for you to set up that acquisition that you are acquiring. If you see Mangalore, we are building a new tank. So we know the cost of making any tankages. And here this is a ready establishment wherein it is having the licenses already having B and C class licenses as well. So we need to capitalize on the ready-made infrastructure that we have.
Okay, sir. Got it. Good. Thank you, sir. Thanks for answering all my questions, and all the best for the future. Thank you.
Thank you so much.
Thank you. Our next question is from the line of Riddhi Agarwal, from an individual investor. Please go ahead.
Thank you for the opportunity. So basically, I got through your point that we are confident to do good margins and good financials in the coming quarters. But can you specifically lay down the steps which will be improve the margins and bitumen volume? So apart from being affected by the geopolitical conditions, so what are the steps companies taking to improve the margins?
As explained in the earlier con calls, as we increase the volume, your bottom line will tend to improve because all the fixed expenses remain the same, and thereby you are increasing your throughput, which with the addition of the new two terminals, which will be operational in this year, we will tend to save even on the rental side, and thereby increasing the volume, the cost of throughput would be lower. Hence, it will add to the bottom line in terms of bottom margin.
Okay, fair enough. My second question would be, sir, on the dry docking impact. Like we have the problem of our vessels being drying up, and in the earlier phone call also, you guided that around 15,000 to 30,000 metric ton is expected to be dried out. So are we expecting this to reduce, or you are just being consistent with these numbers?
You see, as the number of vessels increases, there will be one or two vessels which are required to do dry dock in a year, and that is part of normal business. So it is not that, but those period you have to count as non-operational, which affects in a particular quarter when they are in dry dock.
So we are expecting around 15 to 30,000 metric ton capacity to dry out this year also.
This year's dry dock of two vessels has already been completed as on date.
Two vessels. Okay, sure. Thank you so much, and all the best. Thank you.
Thank you. Our next question comes from the line of Mirza Muzaffar Uddin, an individual investor. Please go ahead.
Hello. Thank you for providing me the opportunity. So my question is that with Karwar and Konkan operational, how much impact will it have on our margins?
This will add to saving of the rentals that we are paying at that port.
So in terms of a percentage point, can you give us?
Percentage is very difficult to answer.
Okay. And my second question is as already asked by another participant, that this year around 3.5 lakh crores of projects are being awarded. How much incremental bitumen demand can AICL capture in Q3, Q4 in the corresponding quarter?
It varies from project to project. As and when they execute, once they start the earthwork, the requirement of all the projects are in different phases. So very difficult to answer in terms of volume or how much they will require. But as the projects will be executed, there will be demand created which is anyways additional to the existing demand in India.
Okay, sir. Thank you.
Thank you so much.
Thank you. Ladies and gentlemen, we have no further questions. I would now like to hand the conference over to Ms. Astha Jain for any closing remarks. Over to you, ma'am.
Thank you, Darwin. On behalf of Heme Securities Limited, I thank Agarwal Industrial Corporation Limited team for giving the time to spend on the call and responding all the queries in a detailed way. I would also like to thank all the participants for joining this call. Now, I would like to hand over the call to moderator for closing remarks.
Thank you. On behalf of Heme Securities, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.